Hello traders, so welcome to the second weekly vlog with me Kevin, your golden option Forex mentor. So today I'll be talking about the risk management, which is one of the most important topics into Forex trading. So to have a proper risk management, it's fundamental for your Forex trading abilities. You have to master it if you expect one day to become a full-time or just a consistently profitable Forex trader. Is one of the main fundamental components of it. So starting today, I'll be answering to the question, how much should I risk into Forex? Like, how much per position should I risk? And this is a commonly misunderstood proportion, because people come into Forex and expect, yes, because of the liquidity to and the leverage to make money fast. There's this possibility, but it actually depends on your starting capital. Like if you have a 10K capital, $10,000 capital, of course it'll go pretty fast as compared as if you only had like $200 or $500 as a starting balance, of course. But in here, like, the proportion that you want to make sure to respect is never risk more than 5% per trade into your trading, regardless of the amount that you have. 5% on a 10K balance, 1K balance, 2K balance, it doesn't matter. Just discipline yourself to always use the same, and every single time use the same risk percentage, whether it is, and as I said, it's to a max of 5%. So you decide in this regards. For my part, personally, I risk per trade 2%. So at Golden Option Trading, we never encourage you to risk more than 5%. Why? Because if you just calculate, like, okay, I come into Forex trading, I don't have a big balance account, maybe anywhere from $500 to $1,000, which is the average amount for people coming in. If you're not somebody who comes from the money already. And you start risking 10%, so it'll take you 10 trades and you're out, like, and you should never, like, this is a proportion that is not really mentioned often, but you should never lose more than 30% of your account. Like, overall, people blow their account. Like 95% of the people who come into the Forex trading industry, they lose their money within their 90 days, because they don't know how to proportionate the risk in an adequate way, because they risk 10%, 20%, which are outstanding, like, proportions. So 5% max per trade is what I would tell you. So choose a proportion anywhere from 1% to 5% and stick to it always for every single trade that you take. And something that I want to complement with this is that in order for you not to misunderstand the concept, a trade and a position is a different element. So a position, a trade, let's say right here we're on British pound, Japanese yen, GBP, GPY, GJ, once again our favorite pair at Golden Option. And right now I'm running bearish. I'm running short right here and already secured some profits. But in here that you see that I took the trade on GBP, GPY, on GJ, that's considered a trade. If I have this trade on GJ and another one on Euro USD, EU, then it will be considered another trade, because it differs from the pair that you're into. So here, if I had this position that I'm actually holding and on GJ, and I had another one on Euro USD, that would be considered as two trades, because there's two pairs involved in here. But in here, as you can see in GBP, GPY, I'm running, but right now I just closed and secured some profits. But right here, I had a position running that I secured. So a position, what is it? It's an entry, a specific entry into the trade, into a specific trade. So in here, I decided to enter twice. And how did I work it out with my management? So as I told you, I risk only 2% per trade. So per trade exactly. So in this trade of GBP, GPY, I wanted to enter twice, because I expected price to come minimally till right here near it doesn't mean that I closed it at this specific level. I just work it out based on my experience and what I see. So I just expected price in here to come minimum to 135.500. So I'll show you just this specific support resistance right here. So 135.5. I hope you can see in here. So maybe zooming in with your device. So I expected, and I just closed it a few pips, like 5 pips away from the target, so at 135.55, closing securing some pips in here. But I have another position, meaning that I expect price to go underneath this level right here, this 135.5 level. I expect it to go even lower to maybe this previous low right here that you can see. So I'll just make it clearer right here. So I expect price to go to this proportion around right here, based on this support, to 135.18/20. So what did I do? So I secured some profits since the trade worked it out in my way, in my direction. Secured some profits in case it returns back to break even, and I would be just opening in a trade and closing it without gaining or losing anything, which is already good, because in Forex there's 3 main things that you need to take in consideration. The first thing, when you open a trade into a Forex pair, your first goal is not to turn in a profit. It's not to make a profit. For the ones who thought that you enter a trade to make money. No, the actual way of thinking for you to move on in an appropriate way is to first, when you open a trade, you want to withdraw, to take out your risk out of the table. So in here I risked 2% on my GBP GPY trade, and my first goal was to run to a certain proportion in which I say, okay, this trade is far enough into my direction just to it would be a waste of time for me, a waste of time and energy to just see it come back and lose money at this point. That would be bad management, risk management from my behalf. So after a certain proportion, I would suggest between 30 to 40 pips along into your direction to put your stop loss at break even. So that's the first way you can take out your risk out of the table. So you're no longer risking as you put your stop loss to the entry price, which means that if the price goes back to the entry, you won't lose and won't make anything, which is already a win in my regards, in my perspective, because if you don't lose money into the Forex market, into the Forex trading market, then it's actually a win, because you're not losing money. It's already a win. You're winning at this point. And then the second suggestion that I would give you is to secure some profits. If you have a 70 pip trade that you expect to catch, but it reaches maybe 40 pips, and you have many positions, you can secure some profits at 30-40 pips depending on your own rules. So I'm not actually telling you to close it at 30 or 40 pips. It's based on you. But in here I had my first position that I wanted to close here around at 30 pips away from my entry, so near 135.50, which was done already. So I moved my stop loss to break even, meaning I'm not risking anything from this moment on for the rest of the position that I have left, that I want to aim at this previous low in here at 70 pips. Hopefully, if it turns out well, and if it don't, then it'll just come back to break even, and I wouldn't even lose anything for this position. And for the previous one that I already secured, I would have gained at least 30 pips. So this is the way that you can, guys, adopt a good risk management in here. So the first thing is the first philosophy that you want to have when entering a trade is not to make money. The first one is to take the risk out of the table, to take out your 1, 2, 3, 5% that you're risking. Second of all, you want to secure some profits. So along the way, you don't want to, just open a position and expect the whole movement if you plan like a 70, 100, 150 pips to work out, it might not go that far because, market does what it wants and your job is to adapt to its conditions. So you want to secure, you want to have a partial profits taken. And the goal is to then turn out the profit for the whole movement if it works out. And everything applied in here tells you that the move is going to be completed. So first one, it's to remove the risk out of the table. Second of all, to secure some profits, and third of all, to hopefully and potentially gain the whole move that you speculated. And something that I really want to help you with in regards of trades and positions. So as a repetition in here is a trade on GBP GPY. If I had another trade on another pair, that would be considered a second trade. But in here I had two positions. So two positions, each one I would, as I mentioned, for each trade that I take, I'm only willing to risk 2%, meaning I had two positions, one already closed and another one running. I'm not risking 2% and 2%, 4%, because this is one trade, GBP GPY, and I'm not risking 2% for one position and 2% for another position. Positions and trades, as I mentioned, are different. So positions in here are how many times I entered into a same trade in GBP GPY two times. So I divided my risk by the number of positions that I took. So in this case, 2. So for the first trade, for the first position in here that I already closed, I had 1% risk on the table. I already took some profits. It doesn't exist anymore. I closed it into profits. And for the second position, right now, as I claim my profits and ran 30 to 35 pips in profit, I put my stop loss at break-even, meaning there's no more risk involved anymore for me. And I'm hoping to claim some profits further on. And a really useful tool that I would suggest you to use in order to calculate your risk properly is you go on Google and you type myfxbook position size calculator or position calculator, whatever you want. It's going to direct you to the same page. So myfxbook position size calculator or position calculator, and it's going to give you this same link as in here that you saw firstly, position size calculator, myfxbook. In this case, you want to enter into a trade as I did. So let's say I rewind this trade and I'm just here ready before taking the trade, and I say, okay, I want to take 2 positions on this trade. I hope you get me at this point about the differentiation between trade and position. So in here I have this trade in which I wanted to open 2 positions, one in here at approximately 35 pips. So from the entry right here, that would be, I entered right here, so about 35-40 pips from my first target, and the second target at 70 pips, as you can maybe see right here if you zoom in. So 70 pips still I mentioned to you. So what would I do in this case to calculate a proper lot to use? Because as I mentioned, some people risk too much by risking 10%, 20% or even more. Stick to something at 5 or less as a percentage of your whole balance account. So 5% or less. I personally use 2. I'm not recommending you to use 2%. It's like, you stick to the proportion that you want, but always use this one, whether it's 1%, 2%, 3%, 5% max. And how do I calculate in here? So a proper lot to use. So the lot is the size of your trade in here. So let's say I'm a you know, a regular trader, an average trader with you know, $500 that I wanted to, since I'm starting into the Forex trading market, 500. So account size 500. I put it into US. Really important. You know, US is like the commonly used currency into Forex market, is the main one actually. So if you don't have your account into US, maybe you have it in GBP, AUD, or CAD, or anything else, but don't lose time in here. It's mostly US that you want to, in US that you want to open your account. So I have $500. Let's say I want to risk 2%, as I said, 2% in here, and stop loss, like, you know, the stop loss, how many, where is my stop loss going to be put it? So at 45 pips. So I wanted to gain 45 pips, 40-ish is in here, and 45 pips stop loss. So it's a one-on-one ratio. So I risk the same as I lose in here, just to give an example. So the stop loss pips, it's 45 pips, as you can see right here. So 45 pips above the entry price, since I'm going short, and it's on GBP, GPY. So it gives me here a lot of 0.02 as a lot. So this is the lot in here that I'm risking 2%. And in the case that I'm risking 2% and you're opening 2 positions, then you just divide the lot by the number of positions. So in this case, I'll be having for each, I'll be risking for each position 0.01 lot in here for 45 pips stop loss at a 2% risk with $500. If I had let's say $1,000 in here at 2%, 45 pips on same GBP GPY, I'll be having a lot of 0.04 right here. So if that would be for one position. If I open only one position on GBP GPY, I would open it with a 0.04 lot. And if I wish to have a second, you know, to have 2 positions from the start, then I would divide this by 2. So I would have a 0.02%, 0.02 lot to use in here. So myfxbook position size calculator, once again. So myfxbook position size calculator or position calculator, it's the first one in here, and you put your balance in here, balance size, the risk, no more than 5%. I repeat, really important. The number of your stop loss pips and the pair you're going into, and it'll give you your proper lot to use for one position. And then if you want to open 2 or 3 positions, then you divide it by the number of positions in here. That way you make sure you don't over risk, and that you get you know, you blow your account fast. So this was a longer blog today, but I'm really happy and grateful to share with you these nuggets that can make the certain tweaks to help you improve your trading. And therefore, for you guys, stick to your rules, stick to your always to your risk percentage. Don't risk more. Like, you know, let's say you use a 1 or 2% risk per trade, and you saw a specific setup on a certain pair that you thought was going to be massive, and you'd be gaining maybe 150 pips, and it's crazy. The setup, everything aligns really well. Everything it seems to be in your favor. You don't, like, you know, don't get excited about this. Stick to your rules. So for the recap in here, your first intention when entering a trade is to take out your risk out of the table. Second, to secure some profits, and third, to hopefully and potentially claim the whole move and gain a lot of pips. That's the goal that we want to achieve, all of us. And you know, how do you calculate? How do you adopt a proper risk management? How do you use an adequate lot? Go on myfxbook position size calculator and compute in the values in here. And if you have many positions, divide your risk by the number of positions that you have. So once again, in here, Kevin, your golden option Forex mentor, and I'll see you guys on the next week's vlog. See you guys. Stay blessed.